Hello, financial fans. My job is somewhat easy this week, finding some stocks that appear to be oversold. I could pick just about anything in the market, throw a dart at a dartboard that had the names of all the companies in the S&P 500 and whatever point the dart landed. You'd probably find a company that was undervalued or appears to be undervalued, and there's plenty of room for stocks to go down this year, being an election year with people running for Congress having an opportunity to say the wrong thing, and they probably will. But for people who are patient, the patient investor who tries to buy low and sell high, this is a probable low point on which we could make our move into the market slowly but surely, buy something now and then, and just watch for what looks like opportunities. And I found some stocks here today to consider. I'm not a financial advisor. Any money you put into the stock market you can lose. But the ones that appear most oversold right now and undervalued, we'll begin with Facebook. FB is the symbol. It's called Meta or Meta Platforms Incorporated now, and FB is the symbol. And it's selling for about $200 a share. And the Yahoo pages show this information for FB, Meta or Meta Platforms. Look at the column on the left, 2/3 of the way down, 52-week range. $169 was the low and $384 was the high. So it's got plenty of headroom. If Meta Platforms can just perform well the next time they announce earnings, this stock should have a real opportunity to go upward. That's the obvious direction it should go. Whether it will go or not, we never do know. Near the bottom of that column on the left, the average volume, 34.5 million shares trade every day, and this stock is considered undervalued, and I agree with that. In the middle column, the third item down, PE ratio 15, which is not bad for a company as big as Facebook. And we look at the dividend, not applicable, no dividend, but the one-year target looks pretty interesting. $301.33 is what some people are anticipating. This could be the level, the price per share 1 year from now. Right now, $198, $199, and it looks pretty promising. Let's move on to the next stock. This is Intel. I keep mentioning Intel because it continues to look good. INTC is the symbol. Column on the left, 2/3 of the way down, 52-week range, $42 and a penny was the low. We're near the low right now, and $58.42 was the high for the past 52 weeks. So it has lots of headroom. It could be moving up. Average volume at the bottom of that column on the left, 37,689,000 shares trade every day. And this stock is considered to be near fair value. And remember, Intel makes chips, and when chips reappear and become part of the economy and there's no shortage, Intel could be in a wonderful position to grow and go higher. PE ratio, third item down, middle column, PE ratio 7.25. That's pretty low PE ratio, and we like low PE ratios. Forward dividend and yield, 3.35%, so about 3.33% is the yield on INTC, and the one-year target, $52.36. That would be a nice upward move. Next we look at Spider's S&P 500. This is an exchange traded fund with the symbol SPY. You also could use the symbol VOO, a Vanguard fund that tracks the S&P 500. They will have about the same numbers all the time. Main difference being that VOO has a slightly lower expense ratio, and SPY has a much higher average volume. But either one should be going up in the next few months and few years. SPY, 2/3 of the way down, column on the left, 52-week range. $385 was the low and $479 was the high. So this one has plenty of headroom, could be definitely moving up. The average volume, 109.5 million shares trade every day. And in the middle column, PE ratio, 4.19. This is an exchange traded fund, and low PE ratios are not uncommon in exchange traded funds. The yield, 1 1/3%. You don't buy an exchange traded fund tracking the S&P 500. You don't buy that for the dividend. You buy it for growth. And year-to-date total return so far, this fund has lost 17% for the year, as the market in general has lost 17% for the year. The expense ratio, 0.09%. If you bought VOO, it would be 0.03%, I believe. And looking at the next stock, in this case, not an exchange traded fund, this is stock DOW, Dow Chemicals, looking really good there. $67.65 after hours, $67.65 after hours, and 2/3 of the way down the column on the left, 52-week range. $52 was the low and $71 was the high, so it has some headroom, and it might move up to be even higher than what its previous high was. We just have to sit back and wait and see. The average volume, 5.5 million shares trade every day, and this stock is considered to be undervalued. In the middle column, PE ratio, third item down, 7.37. That's a very good PE ratio. And the forward dividend, 4%. You get over 4% while you're waiting. That's not enough to keep up with inflation, but it is nice to see a 4% return on your money that could be growing if this stock does perform as I think it might. 1 year target estimate, $74 and a nickel. So that looks like a pretty good move upward if that should happen. And I do thank you very much for watching.